All right, everybody, welcome back to another video with Trader IQ. My name is Ken Marsh IV. In this video, we're going to be going over a couple of examples with my Fibonacci strategy in Euro USD and the Pound AUD. So with that said, read the risk disclaimer and let's get to it. All right, guys, welcome back. In this video, like I said, I'm going to be talking about the Pound AUD and the Euro USD. These are the Fibonacci strategy trade examples for the week. In this first example will be the Pound AUD, and we always start on the daily time frame, and we're going to look for what direction we need to be trading in for the week. In this case, we're on the daily, and we've been very bearish. And if you notice right here, we have a swing low. It has taken that out. And now, once it's done that, it's pulled back, retested, and is starting to move lower. Now, at the time when we were looking to take this trade, we didn't have this movement yet. But we did have the crossover for the 9 and the 18 EMA. So the 9 is lower. So we are definitely in a bearish condition. So we were just expecting a pullback here. But we're going to go down to the 1 hour time frame now. I'm going to show you what we would be doing to take this trade. So move this over. Okay, so this is the week so far. This would be Friday's trading, and this is Monday or Sunday and Monday, Tuesday, Wednesday, Thursday, yada, yada, yada. Okay, on Monday, what I did here is I drew out the opening of Sunday. And remember, we're bearish in this market, so we're looking to go lower. So we're going down. So at this point, what we're doing is we're waiting for the market to pull back. And once it does, we start to see our bearish movement. And what we're waiting for is the market to break back into or past the low here of Sunday. And we're just looking for the high of the week so that we can start looking for the move lower. So we did make a high on Monday, and it started moving lower. But you notice it didn't take this low out here, so we can't take a trade yet. If you remember in my other videos, we're looking for the swing low to be broken before we can enter. Now, so this right here, I don't consider that yet to be the low of the week. So once we started making a move, we made a move back up again, and we didn't take out this yet. So we're coming back, and we come up, and we finally make the high of the week, and this came out on Wednesday during the US session or the New York session. Once that happens, you get a move back down. So they basically, what they did was they manipulated the market, taking out all the stops that are here at these equal highs. They manipulate it. We come down and we break structure here, and we come back down here, and we're testing the open again. But at this point, anytime after Wednesday, if we get another move up higher, we're probably going to be moving higher now. In this case, though, we did get some market structure break here. I was pretty sure this is going to be the high because if the high needs to happen either Monday, Tuesday, or Wednesday. Now, this could have tripped you up, and you say you're looking for an entry here, but again, you're not going to get an entry because you don't get a big enough pullback here to get an entry to sell this. So you don't have to worry about that. Right here, you get this high made, you get the structure break. Here's your low of the swing. So let's draw the Fibonacci out. Right there. And see, you get a nice pullback right here. and this was during the London session. So like I said, your key points are usually going to be happening during one of the major sessions. This high was happened during the US session. It comes back, and then your entry happens during the London session, which is usually what's going to happen, especially with any pound pair or euro pair. So you get your pull up, pull back, you get your entry, and you're going to be targeting the 200 extension, which is here. And we haven't made it there yet, but I'm pretty sure we're going to make it there. We're only about 12 pips away from there. So should be hitting final profit here. But again, get your entry. Your stop loss will be just above this high. Your entry is going to be anywhere from the 62 up to the 70.5. And you're going to take first profit off right at the 0% level. And you're going to move your stop up to break even, and then you're going to let the profit, you're going to let it run to your target here. So let me draw that out for you. Okay, so we'll put your entry right around the 62. That's your target or your stop loss, and you'll be targeting the 200% level, which is right around there. So as you can see, you're going to have about a 4-to-1 trade, stop loss 36 pips, and you're going to be targeting about 148 pips. So that's a good example, and it's not there yet, but I'm pretty sure we're going to hit it. So it's not a big deal. And actually, if you really were worried that it wasn't going to make it there, you can move your stop even further, maybe above this high, or above this high here, just to protect the rest of your profit. So that's the example on pound AUD. And if anything, I go into greater detail in the first few videos. So if you need to go into my channel and find the first trade example videos. I have a playlist, and it'll give you even more detail on this strategy. I have quite a few examples here, so I'm not going to go in too much detail in this video, but you get the gist of what I'm looking for here. So now we're going to go to the Euro USD. We're going to go to the daily, and we're going to look for the direction. Now, on the daily here, we are starting to go bullish again. We did have a pullback, so if I zoom out here, you can see that we moved up here. We kind of went into a range or pullback, but now we've broke structure here, and then we've pulled back to retest this support area, and we've moved back higher. So at this point, we're back to being bullish again, and we've also had the crossovers here for the moving averages. So we're going to go to the 1 hour time frame, and we're going to show you this. Now what I loved about this example was typically we're going to see the low. Now this is Friday's trading, and this is Monday, Tuesday, Wednesday, Thursday. Most of the time, whenever you are expecting the market to be bullish, you're going to have a pullback below the open of Sunday, and you're going to see some type of low form. And on Tuesday, starting around London, all the way into Wednesday USD, or sorry, not USD, but the New York session, and then you're going to get your move higher out of the above the Sunday's open if you're bullish. In this case, we actually just had a run up straight from the get-go. So I'm going to show you kind of how you can trade that if that happens for you. If you're actually looking for that to pull down, it never does. Just usually when that happens, you're going to get a pretty bullish weekend. It's just going to go up and up and up. So in this case, if it never really goes down lower and it just starts to move higher straight from the open, if it takes out Friday's high like it just did, and then you see how it takes it out, fakes out, comes back down, triggers people to probably sell, but they don't make it there. Now, we guess, again, you can't enter this because according to our rules, if you draw your Fibonacci, we don't get an entry. So if we drop the Fibonacci up there, as you can see, we don't get an entry. We get really close, but we don't get that entry. So say you missed that entry, not a big deal. All you got to do is wait, or say you just miss it, period. You're expecting the low to happen. You come back on Tuesday, oh no, I missed it. It's not a problem. You can look for your entry to happen because see, we've already had our structure break. So, and we missed the pullback, so that's not a problem. On Tuesday, instead of the low course forming here, you can look for your entry now. Now, right here, and let me zoom in. This is the London session here. So you're waiting for it to move up higher. Then during the US session, this is the open of the US session or the New York session, you're going to get your pullback and you're going to get your entries. So you're going to draw your fib from here right to the high, and you see you get your entry right here during the New York session. And as usual, you're going to be taking first profit off at the 0% level. Move your stop up or not, whatever you want to do. I prefer to move it up. Like I said, I protect my profits, and I like to lower the risk of having any drawdowns or any major drawdowns. So I always take away my risk as soon as I can, but I like to see the market move up quite a bit before I do that, so that if we get any kind of pullback, I can sustain that, which like right here, but just totally fine. It didn't even come close to break even, so it's not a problem. And then of course your final target's gonna be 200% level, which it hits it, breaks it nicely, and then of course consolidates. Now, if you watch my 9 EMA strategy video, last video, I talk about whenever the market structure is broken, usually you'll get consolidation and then a move up, and then you're going to break something else, and it's going to consolidate again. So this is probably a break of something. I'm not going to go in there and search all that and show you, but usually when you typically break a high of some sort, a previous high, this is what's going to happen, especially in a higher time frame. Or because that's usually showing overbought scenarios, or if it's on the lower end, of course, it's going to be oversold scenarios. So this is a great example. So let me show you what kind of profit we would have got here. So again, you're going to be entering somewhere between the 62 and the 70.5. And so your stop loss is going to be below this low. And always consider, and always remember, when you put a stop loss in, just make sure you give yourself a little room below it. It's hard for me to do that with this tool because it always wants to put it at the bottom or somewhere on a candle. But it gives you a general idea of what we're looking at. Let me get this out of the way for a second here. And of course, we're going to be targeting the 200% level, which is right there. It's close enough. Okay. Get rid of this. All right. So again, the theme as usual, 3, 4%, 5%. 5 risk reward to risk ratio. Right here, we're at a 4.3. So probably around a 4 reward to risk on this trade, and we're risking about 15, 18 pips, depending on your spread, and targeting around 65 pips, 67 pips. Easily hit, all in about 1 day's time. It's a really nice example there. And of course, after it's taken out, you get sideways action. You actually get a nice pullback here. Takes out this low here for liquidity, and looks like we're going to be moving higher or going into a range since it is the end of the week. Plus, we're coming into Christmas next week. It's a Christmas weekend. So probably not going to be a lot of trading going on tomorrow. The news is pretty weak also, so not a lot going on there. But just, guys, use these examples. I do these examples for you so that if you are using the strategy or attempting to use the strategy, now remember to try this stuff on a demo first, or use the lowest lot sizes possible. I'm not responsible for what you do with your trading account. So just remember that and use proper risk management. If you do, you're going to have a whole lot. I mean, it's going to be, if you use proper risk management, you're not going to blow your account unless you lose just about every trade. And you don't lower your percentages. I've talked in many videos about how I do that. I will probably do a little risk management and trade management video just specifically for that in the future. Just so I have a playlist of all my different tips and things like that I'll be building up. Just remember, we're always going to try to win more than we lose, or I do. And that way you can take as many losses as you need to before you get those big wins. Again, don't be afraid to lose. That's normal. You need to lose really to help you to learn from it. If you won every time, you wouldn't learn anything, because eventually you're going to lose. You're not going to win every time. And then when you do lose, you're not going to know what to do with yourself. So, losing is fine. There's nothing wrong with that. I had a pretty big lesson. I was telling my fund manager about it. At the beginning of the year last year, I had a 22% drawdown because I didn't use the risk and trade management strategies I use now. And after I had that 22% drawdown, for me, that was just insane. I was freaking out. I didn't know what to do. So I stepped back and I looked at everything, and I decided to actually, I was in the middle of reading one of my old poker books. I used to be a very avid poker player, made a lot of money doing that, but that's beside the point. I've remembered that there were some things I did in poker that I could incorporate with trading. So I did that. Whenever I won really, really big, I would not playing as many hands for one. I didn't bet as much, and I would wait for better hands before I made my moves. And I started thinking about that, and I said, well, why don't I lower my lot size to start losing, so that when I do lose or get into a losing streak, I don't lose as much. And that's what I do. And then when I start winning, or I start getting back up to even or higher, if I double, when I had certain thresholds, I would put some money back and I wouldn't use it. So I was basically protecting my equity in poker. So I decided to do the same thing now. And ever since then, now if I get a 5% drawdown, I freak out. So, imagine freaking out only when you get a 5% drawdown. I know many, many, many traders, especially people that I'm teaching, that regularly get 10, 15% drawdowns, sometimes in the first trade. So those are the ones that I really work with to try to help them watch their risk. A lot of them, of course, improve pretty quickly. But you get into a bad habit of, when you do win big, of wanting to do that all the time, which is great. I mean, awesome. Who wouldn't want to do that all the time? But it's very, if you're been trading for a while, that doesn't happen very often when you do win big. So you can't go for home runs all the time. Sometimes you got to just get on base, maybe get a double. It's just something that you really, really need to focus on and take care of, because if you want to exist in the trading world and you really want to make this a profession, or at least build your wealth over time for the future, for retirement, you got to be very serious about protecting your profits and protecting your equity and building your account. Compounding is very important, so you need to do that. And the compounding is just important when you start losing. So you got to lower that percentage, and just be safe, trade smart. Nothing wrong with learning. I am a mentor. I have a few people that I do teach, and especially with Imarketslive. So if you guys like these videos, of course you're going to get a bunch of free content. But if you want to learn more and you want to be involved in a company that has multiple educators, I think there's over 20 educators in Imarketslive. The CEO of the company is a multi-million-dollar trader, probably exceeding. I know he's exceeded over $85 million, and just it's just a great place. You have great tools, things like that. But if you can't do that, you're going to get great information from me, and maybe later down the road, if you're able to afford or able to to invest a little bit in yourself and get some education. You know, people spend, man, thousands, $20,000, $30,000, more than that on college education just to get a $50,000 a year job and pay for student loans for the rest of their lives. And yeah, maybe eventually down the road they're going to make a lot of money. But you can do that. You can pay a little bit, way less than that, for a trading education, and actually learn how to invest yourself and become an investor and make a lot of money. You know, way more money than you could ever make at a regular job, for one. So, you know, just keep that stuff in mind. I'm not going to go on too much on this rant. I don't want you guys to disappear on me, but just remember, you know, on the 9 EMA strategy, you got to wait for that structure break. You got to get that bullish movement. So that way you can get a more higher probability trade. And, you know, as you use this and you practice this, you're going to start seeing that 200% level is going to be hit a lot. And again, you know, when you move in your stop losses and you're taking profit off, you know, at that 0% level, you're protecting your profit. So if it doesn't make it there, you're still going to make a little bit of money, and you're not going to lose any money. So that's it for this video. Probably going to be the last one for the year. I doubt I will be doing anything next week because it is Christmas. You know, I got kids and I got stuff to do, family. Well, I think we have multiple Christmases in my family because, you know, everybody can't come at one time for us. So with that said, don't forget to like, comment below, subscribe, and click the little bell so that you get my new videos. I upload videos every week. And if you're interested in finding out more about Imarketslive, I have a link in the description below. Also, follow me in my other social medias, which will also be in the link in the description below. So you guys have a Merry Christmas and a Happy New Year, and we'll see you next year. Bye for now.
I've been watching you.